Yeah, thank you so much for joining us again at All That Matters. You've been here a couple of times. Last time you and I spoke was 2022. I kept getting the date wrong as to when you and I first met in 1998, but anyway, but a lot has happened. 2022, everyone was talking about the metaverse and NFTs, and it was all, a lot has happened in the crypto and Web3 world since then. So what's happened?
Well, I mean, I feel like you should have a panel here that says crypto matters, actually. And if there's anything to be said over the last sort of since 22 and where we are now, crypto definitely matters a lot more than ever before. So 22, the asset class was about $1.5 trillion. Today, it's over $4 trillion, right? That's when Bitcoin was roughly around anywhere ranging from, I think, 30, 40,000 to now 115, give or take. The other thing is, more importantly, the adoption. Back then, we had maybe less than 100 to 150 million people owning crypto assets. Today is over 500 million, right? So despite all of the gyrations, and you can always tell the strength of an ecosystem, that when you have really big shocks to the system, like, basically with 22, we had FTX, we had Terra Luna, we had the hostile sort of US regime going after anything crypto, and survived all of that and came out stronger. I think we've basically come to a point where I think it's an inevitability, right? So just some stats on NFTs and the metaverse. NFT sales today is around a $500 to $600 million a month sales, right? So most people don't think about that because they're not in the space. And I kind of like to give it as like the China example, which is like, a lot of people would say, oh, the China bubble, it's no growth or it seems unrealistic. And then if you're not in China, you don't know. Whereas everyone in China is like, what are you guys talking about? It's like the fastest growing economy, it's exciting. If you're in Shanghai or if you're in Guangzhou, you see it, right? And the same is basically happening in crypto. If you're not in the space, you won't know it. But if you're in the space, it's actually doing really well. It's changing DeFi, sort of decentralized finance. Everything basically is very liquid. So the other stats that's interesting is that there's now daily trading volume of crypto assets is about $200 billion a day, which basically billion, which is basically larger than sort of NASDAQ and NYSE at certain days as the largest stock market. But the difference is that anyone can tap into it. Whereas before, you had to be an IPO, you needed some permissions. Here, you can tap into that open market. So you've created this entirely open ecosystem. So it's evolved a tremendous amount since then.
So NFTs are still a thing?
NFTs is still a thing. But this is how it typically goes with cycles, right? We used to talk about the internet being a thing, .com bubble bust. But nobody's talking about a new bubble emerging, but the internet just became a bigger thing. And that's basically what's happening throughout. And NFTs are essentially our digital status items, right? And you have all sorts of interesting things happening there. So some of the values have come down, but broadly as a market, it's definitely here and strong.
And also there was a lot of talk back then about the metaverse. In fact, before Facebook changed its name to Meta, we were going to change our event name to Music Metas, and because everything was about the metaverse.
Yes.
So what has happened to the metaverse?
Well, I mean, to me, the metaverse, or what we call the open metaverse, never changed, which is the entire Web3 crypto space. That's expanded. But I think a lot of people confuse the metaverse as sort of Mark Zuckerberg's vision of everyone wearing goggles, which kind of feels a bit more dystopian and controlled in a Facebook type world. So that's obviously not something that we think is the future. And I think it's also terminology. Unfortunately, things like Web3, to some extent crypto and the metaverse, the branding has been sort of dragged into the mud. So if you're not in the space, you're looking at it and saying, what is this? But as I said earlier, we think the entire crypto space is the open metaverse, which means that it's a $4 trillion market. And I would also say that it's a new market opportunity to sell into, right? So crypto is a new wealth class. So this is not, it's not to be viewed as something that, like a banker who invested in it and made money. It's an entirely crowd of people who don't come from money originally, right? Someone who invested in Bitcoin 10 years ago is now a multimillionaire. That should be your customer. You should be selling to them, right? And to me, it's to be viewed very much like the China sort of metric, which is China was not a market 20 years ago because most Chinese people didn't have the spending power, and now they do. Crypto represents that. Right? You have 500,000 people who own crypto assets, of which basically 10, 20 million of them are literally this new multi-million-dollar wealth class who can basically spend, and they do, right? And so when you have crypto conferences like right now, Token, right? Who's sitting in all of the expensive hotels, spending all the money, it's those guys. And if you are a business of any kind, whether it's a restaurant, a fashion brand, and luxury brands get it. The luxury brands were amongst the first to tap into those and sell into them and done quite well.
I mean, talk about brands, and this will, I think, relate to a lot of people in the room. Big brands still seem to be cautious about crypto. So what have you learned about trying to convince traditional companies to take that leap?
So the are two big reasons why big brands are cautious. One is the volatility that they don't know how to control. It comes down to understanding that once you tokenize any asset, it ends up becoming a financial asset because it's a capital asset. And that means that there's volatility implied. Like, it doesn't matter if it's real estate, if it's a share price, or if it's a tokenized asset of any kind, you open yourself up to the market. So that's one thing they're worried about. But the second thing that they worry more about is regulatory uncertainty. Right, so you can see this in the US, because the previous administration with the SEC under Gary Gensler was so hostile to crypto, every corporation basically didn't want to touch it. Because if you did, you would basically get a knock from the SEC. And if you're a global business, most of them have businesses in America or are American-based. You don't want to go out and basically say, hey, I'm doing something with tokens. You get into trouble. But now, under the Trump administration, that's completely changed. And so the stablecoin regulation, the Genius Act, just passed basically over the summer pretty much in the US, which means that now there's a regulatory framework where you can issue a stablecoin being essentially, in this case, a US dollar-based tokenized asset, which is important to understand because it's created a huge reach for the US dollar around the world. Just by metrics and size, the 6th largest buyer of treasury bills were stablecoins, right? More than Japan, Germany, France, and Korea combined, right? So that gives you an idea of the size and scale. And it's about $300 billion, roughly, give or take, worth of stablecoins in circulation. The other thing about stablecoins, because we have the Genius Act now, every company is now saying, oh, I want to issue a stablecoin of my own. So it's not just banks. You have Amazon, you have Facebook, you have Google. All of them are now saying we're doing a stablecoin, right? Because they can use their assets as a way of generating yield from that. That means we're going to have other forms of US dollars emerging in the market. And of course, if you're a business, how do you tap into that, knowing that there's more liquidity and more capital in those audiences now? There's 150 to 200 million people in Africa, South America, Southeast Asia. They don't have bank accounts, or if they do have bank accounts, don't have access to the dollar, that are now all dollarized. These are potential customers, right? If you want to reach them, right? So they wouldn't have PayPal, they wouldn't have Venmo, they wouldn't have Stripe, but they do have stable coins. That's a new market you can address as well, right? So that's basically what happens when you tokenize. It's like value creation at the speed of the internet.
And I think, you've invested in many hundreds of companies.
Over 600.
Over 600 companies. So what qualities make you say yes to a founder or a project? What are you looking for?
Well, okay, so we believe in this thing in Web3, in crypto, in this, what we call the sort of shared ecosystem. So the value in crypto is because the network effects are tied to each other, you don't have the same monopoly effect, right? So meaning that if Bitcoin, for example, was to go to $1 million, hypothetically, it actually benefits the entire space because liquidity is permissionless and can basically flow everywhere. That's not true, for instance, for Apple and Facebook and Google, right? So that's kind of one thing. So that means that when you put money back into the ecosystem, even if the project doesn't necessarily do super well, it actually benefits the entire sort of ecosystem as a whole because it furthers it. So actually, speaking of this, actually, I can give this example. So before Apple paid a dividend, they had $160 billion of cash, just sitting mostly in Ireland, doing nothing, right? Imagine if they took 10% of that cash and turned it into an ecosystem fund, really just to maybe invest in companies that are building on their app store, building on Apple, right? They just want to build their own ecosystem. That would be a $16 billion startup fund. That would be the biggest startup fund in the world, right? And we think the future of investing, as we do, is corporate balance sheet. We're not a fund. We invest out of our balance sheet. Now, if you remember the battle that Apple had with Epic, which they lost, around the whole 30%. If they actually were the largest investor in their own ecosystem, supporting it, just like governments sometimes do with grants in the past, then people would probably be okay to pay 30%. And they defend Apple as well, because they know that when they pay that 30%, it goes back into the ecosystem to help grow it, to bring more customers, to enhance it, right? And maybe Spotify should have a musician fund, right? Because musicians don't make money on Spotify, so maybe there's another way for money to come back. Just you create a healthier and broader ecosystem, right? Because all that money is now locked in treasuries of companies rather than funds, right? So we think that's kind of the direction. So we look for founders who believe in that. I mean, your typical qualities, are you capable, talented, all that kind of stuff, sure. But where it's a bit different is that we look for people who are not thinking zero-sum. Zero-sum building made sense in the Web 2 era, when you had basically everything around building monopoly frameworks. But in crypto, it's not possible because the tokens and the blockchain is permissionless. So that means you can't think of building a monopoly. So if you're thinking a monopoly framework, you're going to fail in crypto. But if you're thinking sort of more inclusively in a shared ecosystem way, then you can succeed. And that's probably the biggest difference in perspective between the two, plus financial literacy.
So it's never a dull moment, right, in crypto land. But where do you see the industry realistically kind of heading in the next 3 to 5 years? And for everyone in the room here, Web 2 people like myself, not saying everyone's Web 2, but what do we need to do to catch up?
So, we used to have this term around fintech companies, and when you say you're a fintech company, you think that you are focused on finance and that's your area, and then you could be focused on music and you could be focused on gaming. Well, what crypto is doing is essentially turning everything into fintech. So we're old enough to remember a time that there was this thing called digital literacy, right? And digital literacy, where I remember I had a small stint at AT&T in sort of 97, 98, and I had to print out my emails for my boss so that he could read his emails because he treated it like a version of a fax machine, right? And now think about how many companies today would succeed if they were not digitally literate. No such thing. Everyone in this room is digitally literate. Our children are growing up to an age where digital literacy is just part of who they are, right? And if the less digitally literate you are, actually the less competitive you are, right? So the next evolution is financial literacy. So right now we have a very small percentage of the world. I think the global statistic is that less than 10% of the world have a stock portfolio, right? And of course, Singapore and Hong Kong are exceptions. These are places where you have a very high financial literacy rate. But most of the world, where you look at Europe, for instance, and it's very developed, but financial literacy is rock bottom because of their very tenuous relationship with money. But it means, though, that if you're a business that has essentially crypto rails, that is fintech enabled, that understands money, you will optimize your business far more than your competitor. So what crypto does is it makes all these tools open. So you can have open yield, you can better productivity, you can make more returns. The point being that if your competitor is basically taking advantage of this and you're not, you're out of business over a while. It's kind of like if your competitor is on the internet and you're not, likely your competitor will succeed on the internet. That's what's happening. So you have to become more financially literate. What crypto is also doing is making everyone more financially literate as well. So right now we have maybe hundreds of millions of people that are truly financially literate, and we're going to have billions of people that are truly financially literate, which means that they will look at products more in the vehicle of, well, how is it something that could be an investment or at least implied? Like Birkin bags or Rolex watches are brands that are implied for its status, but they have value in a financial sense, right? If they didn't have that value, then it wouldn't be viewed this way. The tradability or the ability to say that it has value is part of its brand image, which is something that traditional brands never had to think about, and now they have to think about that more and more. I think this is going to be more pervasive because your audience will demand it because they're more financially literate.
So you're not betting every day, but you're investing every day. What are the bolder decisions or bets or investments that you've made that others thought may have been crazy? Or every single one is crazy?
Well, no, it's not everything is crazy. But I would say, first of all, I mean, as humans, we're risk engines. Everything we do every day in our life is a form of risk. If you don't take risk of any, and I don't mean this in money terms. I mean, even for all of you who are a little younger and still in the dating scene, asking someone out for a date is a risk too, right? Like everything we do is implying a risk of some sort that we do, right? And so on the money side of things and the investing side, when like right now, we treat investing simply as deploying capital. I think of investing as deploying into relationships, right? So when you do an angel investment, anyone who does angel investing recognizes that they're not just investing for a return, they're investing into a relationship with that founder, longer term. Very many of them don't actually, maybe their first product doesn't work out, maybe their second product doesn't work out, but by the time they do it the fifth time it works out, you've built a relationship. If he's talented, he'll come back to you first the money that came in first. The number of times that we made returns on founders who had failed many times and then finally came back was infinitely higher because it's the lesson. Maybe we funded their education, if you will, but then later on they would have these blowout successes because they've gone through these lessons, right? So deploying capital, so-called risk capital, is deploying in relationships. I would argue, though, that you should invest only in things that you appreciate, understand, or have conviction in. Like, you might not understand the business, but you believe in the founder. I mean, that's basically no different in crypto versus in other areas. But I think you have to deploy your capital. Just a stat, for those of you, I don't know how many people here still save cash, as an example, okay? Maybe I won't put a handout here.
I have a friend who does.
Yes, I have a friend who does, right? I mean, money has been inflated since the Lehman crisis by 300%, right? And the dollar will keep printing. It will keep printing. And the reason why stablecoins is so important is because they have now got 200 million more people around the world that have dollars, which every time you print more money in the system, you're taxing the world. That's the American business model. Make no mistake. They make money by printing more cash. So you won't get a fiscal discipline, not just because it's politically inconvenient, it's because that's how you fund everything. Which is the reason why if you own real estate or hard assets, your value is fine, and you can do hedging yourself, but if you don't, if you only own cash, you get poorer, right? And so today, in real money terms, people from 20 years ago make less money in real money terms, right? And that's why people are drawn to crypto, but also to digital assets, and that's why financial literacy is important, because every government is basically just printing cash to sort of, print themselves out of money. We've entered a different era, right?
I've taken a lot of notes. That means I'm financially literate after this conversation. So final question, and it really, it's always wonderful having you here because I really do learn a lot. What is up next for Animoca?
Well, so Animoca is fortunate to be sort of somewhat at the forefront of this, not just as an investor, but in the space. We now manage, it's prop capital, but we manage basically billions of dollars of assets. For us right now, it's about institutional growth. We're doing a lot of things, how we bring more people in. For instance, we've tokenized student loans. That's kind of interesting. Student loans is a $3 trillion market. It's a highly inefficient market. It's also a market that's heavily abused with high interest rates because you can get better yields with crypto. You can also actually translate that for lower interest for students. They then get those assets that they can then spend and use and learn about money. The other one is sort of with Nuva, which is a joint venture between us and Provenance and Figure Technologies, which just went public, is basically a way where you can tokenize all your assets. So it's not just real estate. This one is mortgage-backed securities, about $15 billion worth. But also, imagine, for instance, here, like we just had a panel on music. Like you could, for instance, tokenize your music royalties or your music ownership. And what you can then do is you can basically sell it to others, right? And there becomes a market from that. And it's not constrained just to a publisher that owns it. You could actually create an entire marketplace where your fans don't just are fans, but they could become almost equity holders in your projects by tokenizing the royalty streams and being partners in that, right? So there's a future where all of that is broadly expanding. The other thing we're doing is it's a stable coin with Standard Chartered and Hong Kong Telecom in Hong Kong, licensed by the HKMA, which is a central bank. So a lot of things happening, but everything is around how do we bring more people into crypto? How do we have more people have digital property rights, which is essentially what's possible through tokenization. And we believe that the entire world will be tokenized in the same way that the entire world was basically digitized through the internet.
That's fantastic. So just to summarize, you've talked about, crypto is clearly very big, bigger than NASDAQ, $4 trillion you said being invested.
Just to correct though, it's 4 trillion today, but when you look at the entire asset space, it's about 900 trillion.
900 trillion.
The entire asset market is 900 trillion. The stock market is 128 trillion. Commodities and so on, like 300 trillion. So you can see that while 4 trillion seems like a big figure, in relative scale, it's still small. But I want to point out one thing, right? This is, all that matters. You're all talking about intellectual property, right? And basically, and intellectual property was actually a very small market, and today it's an $80 trillion market, which is about 4 times that of gold, right? So this is something that came from our creativity and our human imagination, and that's basically where we think crypto will go next, right? So it's still early days, I would say.
Well, ladies and gentlemen, I think that's been an amazing masterclass in crypto. I've understood what you said, and that means a lot. So it means I'm financially literate now. But ladies and gentlemen, please give a very big round of applause. Yatsu, thank you.
Thank you.